The story into the ECB meeting is that potentially we're going to get more hawkish. Has this change that Bloomberg reported taken that off the table a little bit?
Our view at BlackRock has always been this is likely to be a relatively dovish meeting, although we've seen growth pick up in Europe, and that's certainly been encouraging, both in terms of the macro data, but also the earnings data. Inflation and inflation expectations have been anchored at very, very low levels, not just below the ECB's forecast, but well below the ECB's target. And for us, that's a good reason for the ECB to remain very cautious. We think any significant move away from what's an extremely accommodative monetary policy is likely to be gradual and still some way off.
And you sound a lot like Draghi. He's been pounding that drum. But take a look at the Bloomberg function here. This is MIPR, market implied probability of a hike. So this dotted or yellow line is where we were in the beginning of the year. The green line is where we are now. And I just go to show how much the market's re-rated for higher rates so quickly. You can see the first hike expected in about a year. Is the market still too hawkish than the ECB will actually be?
I think in the short term, the market is still too hawkish. I think it needs to adjust. I think the ECB is going to be very cautious, very wary about tightening too early and potentially derailing what we believe is a self-sustained above-trend expansion. But when we look further out, perhaps to 2018 and beyond, then we do see scope for the ECB to raise interest rates to start to normalize back towards a more appropriate level of policy for the broader economy as that sustained expansion takes hold and as we hopefully start to see inflation pressures broaden.